Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about the GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, all these previous rejections to the upside have been created. So every time the market tested its zone, it got rejected to the upside quite aggressively. The only time in which the market actually managed to break below that zone was with this push here, which immediately turned out to be a fake breakout to the downside because the market then just broke back above and then every time proceeded with respecting this area as support. Right now, the market is entering once again inside of this same level of support and demand, from which there is once again the possibility of seeing a potential rejection to the upside, as already happened in the past, every time the market was testing this exact same level. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that in creating this push to the downside, the market is also currently printing this overextended M pattern. Now, I spoke about this pattern quite a few times. When there is an M pattern, precisely an overextended M pattern, there is an increased probability of seeing a potential push to the upside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. So at the moment, that would definitely give some room for a potential rejection to the upside away from that monthly support and demand. Now, this pattern is not obviously every time, but in my experience, when there is such pattern, there is an increased probability, as we can see, for example, here, to see a potential push to the upside for the market to retrace to the 0.32, as the market did exactly here after this pattern, as we can see. So it's not every time, but in my experience, there's an increased probability when there is such pattern to see a potential push higher. And let's keep in mind that at the moment, the market is also testing that monthly support and demand that we have previously identified. Therefore, increasing the probabilities of this potential push to the upside. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, we can see how we just got a massive impulse to the downside. Now, after the creation of an impulse, the next logical step would be for the market to provide a correction before then, even if it wants to continue lower, because no market can just go down in a straight line. Every market will need, even in the strongest downtrends, corrections in order for new sellers to enter into the market and push it lower. So if this market is to continue even to create lower lows and lower highs, anyway, from here, it needs a rejection to the upside. And keep in mind that as we're testing that monthly support and demand, in my opinion, there is an increased probability of seeing this potential rejection to the upside. Now, before we dig deeper, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on the GBP. Now, if we're looking at the GBP, we have to keep in mind that already we're looking at the GBPUSD because all currencies on the spot are traded against the USD. We can see how just with the last report, now net positions have once again started increasing. So institutions have once again started moving back to the bullish side for the GBP. We can see how shorts now decreased from the peak at 75k down to 63k, and we already have more longs than shorts with 119k longs compared to 63.9k shorts from an institutional perspective on GBPUSD. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, as the market is approaching this strong a monthly historical support and demand, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, rejecting to the upside that historical monthly support and demand area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.